The question surfaces every so often, a whisper in diplomatic circles that sometimes grows into a public roar. Should the United States buy Greenland? Today, on January 20th, 2026, the query feels more relevant than ever. Greenland is a vast expanse of ice and rock, an autonomous territory within the Kingdom of Denmark. It is the world's largest island, yet home to a population smaller than many American towns. The idea of a purchase seems like a relic of a bygone era, of manifest destiny and territorial expansion. Yet the question persists because Greenland is at the nexus of immense modern challenges and opportunities. Its value cannot be measured in a simple real estate transaction. We must weigh the potential benefits against the true costs, framing this complex issue through a lens of economic gain, strategic advantage, and profound environmental responsibility. To truly understand the stakes, we must look beyond a simple price tag. The conversation is not just about acquiring landmass, it is about influence in a rapidly changing Arctic. It is about confronting the direct, tangible consequences of a warming planet. The Trump administration's 2019 inquiry, though publicly dismissed by Denmark and Greenland, brought this strategic calculation into the open. The real price is a complex equation. It involves billions in investment, delicate diplomatic maneuvering, and a moral obligation to the people of Greenland and the global community. Deciding whether the purchase is worth it requires a sober, clear-eyed assessment of all these factors, looking at both the immediate rewards and the long-term repercussions. We must see this as a cost-benefit framework, but one that expands beyond dollars and cents. It is about influence in a rapidly changing Arctic. It is about securing resources. It is about the consequences of a warming planet. This essay will dissect three core areas: the economic, the strategic, and the environmental. We will explore potential gains for the United States and examine the immense costs and risks associated with them. The costs are not just financial. They are political, social, and ethical. They involve sovereignty, indigenous rights, and stewardship of a fragile ecosystem. The economic allure of Greenland is undeniable, a modern-day gold rush narrative whispered among geologists and investors. Beneath its colossal ice sheet and along its rugged coastline lies a treasure trove of untapped resources. The U.S. Geological Survey has estimated potential deposits of oil offshore and natural gas offshore. These resources could bolster American energy independence. Vast quantities of minerals critical to our high-tech world are also present. Rare earth elements, essential for smartphones, electric vehicle batteries, and advanced defense systems. Greenland may hold large undeveloped deposits outside China, which currently dominates the market. Securing a stable, friendly supply chain is a powerful incentive for Washington, but that dream is tempered by harsh reality. The costs and challenges of extraction in Greenland are staggering. It is one of the most inhospitable environments on Earth. Lack of infrastructure is a primary hurdle. There are virtually no roads between coastal settlements. Building ports, mines, and processing facilities, plus worker housing, could require tens, if not hundreds of billions up front. Extreme weather drives costs, and price volatility can erase profits. This is high-stakes venture capitalism on a national scale. Timelines can span decades. Surveys, impact assessments, permitting, and arduous construction unfold as markets shift. A discovery elsewhere or a tech breakthrough could make a Greenlandic mine obsolete before first shipment. Taxpayer money would be on the line. Massive loss is as real as the potential windfall. Greenland's small but viable economy is based on fishing and tourism. A mining-only influx could disrupt existing industries and create boom and bust cycles that harm communities. A sustainable approach: partner with Greenland, modernize its fishing fleet, support sustainable tourism, and offer technical assistance for locally managed projects. These steps can yield steady, long-term benefits without colossal risk. This path prioritizes stability over speculation, while keeping American interests aligned with local resilience. In the broader ledger, gains that strengthen communities and ecosystems compound more reliably than volatile extractive bets. Greenland's strategic value is etched into the 20th century and is even more critical in the 21st. Its location is its greatest asset. It forms a massive land bridge in the Geopolitics Gap, the maritime corridor between Greenland, Iceland, and the United Kingdom. The United States established Thule Air Base, a cornerstone of aerospace defense and missile warning for decades. As ice recedes, Greenland's sentinel role grows, monitoring naval and air movements across newly navigable waters. Great power competition returns to the Arctic. Russia reopens bases and asserts the Northern Sea Route. China declares near-Arctic ambitions and invests in Greenland. For the U.S., a stronger foothold would solidify presence and enhance surveillance, helping ensure strategic waterways remain free. But an outright purchase carries significant diplomatic costs. Greenland is home to a proud people and is an autonomous part of the Kingdom of Denmark, a key NATO ally. The sale notion was flatly rejected by Copenhagen and Nuuk. Pushing it could fracture relations and strain NATO. Allies might see a colonial mindset. Lost trust could outweigh any strategic gain. A wiser path is partnership. Upgrade Thule with allies, expand joint exercises, invest in Greenlandic development, and act as a reliable partner to achieve strategic aims. Greenland is the ground zero of climate change, and its massive ice sheet, in some places nearly 2 miles thick, holds enough frozen water to raise global sea levels by more than 20 feet if it were to melt completely. The rate of this melt is accelerating, confirmed by decades of scientific data. This is not abstract. It has direct, catastrophic implications for the United States. Rising seas threaten Miami, New Orleans, and New York, displacing millions and causing trillions in damage. The ice sheet is not a resource to exploit, but a global commons whose stability must be protected. Paradoxically, melting makes resources more accessible, tempting drilling and mining that would further accelerate the melt. Industrial expansion would spike emissions in a fragile ecosystem, creating a disastrous feedback loop. Any U.S. involvement carries stewardship obligations, massive investment in science, monitoring, and potentially unproven interventions, with immense financial and political costs. America can lead by protecting the ice, invest in research and sustainable economies. The return is a more stable climate and more secure coastlines. In grand debates, it's easy to overlook the 56,000 people who call Greenland home. The Greenlandic people, mostly Inuit, have a rich, resilient culture tied to this land for millennia, with their own language and traditions. Since 1979, Greenland has been self-governing, with a growing national identity. Their clear desire is for greater independence, not a new colonial master. A purchase proposal is deeply offensive. A resource rush could overwhelm housing, healthcare, and social services, fueling inequality, cultural erosion, and lost livelihoods. The Self-Rule Act gives Nuuk significant control, including over resources. No major project proceeds without their consent. Ignoring their will invites political resistance, protests, and legal challenges. A durable path: listen to Greenlanders and invest where they prioritize: education, healthcare, connectivity, and sustainable development. Trust built through partnership yields access and influence far more valuable than any transaction. Economically, Greenland offers mineral and energy promise matched by colossal risks and near-prohibitive extraction costs. Strategically, its location is vital. Environmentally, a melting ice sheet threatens global coastlines, including ours. An outright purchase would be fantastically expensive, diplomatically toxic, and would saddle America with moral and financial responsibility for a global climate crisis. True costs far exceed any sale price, alienating a NATO ally and disrespecting Greenlandic self-determination, likely dooming projects on the ground. Short-term resource gains are dwarfed by long-term feedback risks that threaten our own cities. The purchase logic, a relic of the past, does not fit 2026. Partnership is wiser and more cost-effective. Invest in sustainable development, bolster the economy, support people, and collaborate on critical climate science. This strategy protects our strategic position, fosters opportunity, and confronts climate change head-on. True power now comes not from owning territory, but from resilient alliances. The choice is how to value Greenland, a commodity or a vital partner and climate barometer. The evidence favors partnership, a lower cost, lower risk, higher reward path aligned with American interests and values.